Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to the Campus Dialogues, a Muslim Views production in affiliation with MuslimFin. MuslimFin, your roadmap to Islamic banking and finance. I'm your host, Ali Sali, and we're going to have, back on our show this evening, we're going to have a regular.
Of course.
Has become a regular on the Campus Dialogues now, and we're excited to have him on as a regular.
Part of the furniture now.
Part of the family now.
Yeah, 100%.
But here to introduce our guest is my good friend, colleague Siraj Buzik. Siraj.
Assalamu alaikum, Ali. How you doing?
Salam.
Always good to be back in office.
Always good.
I'm not going to labor on the introduction. It needs no introduction. Our guest tonight is Abdulaziz Davids. Abdulaziz, welcome back. It's always awesome to have you on our show. We really enjoy having you on the show. The insights and the information you bring is really enlightening, not just us, but our audience as well. So we do appreciate that. The last time we spoke, you gave a market update, in terms of what's happened over the last couple of months with tariff hikes, the trade wars. So we sort of want to carry on from that discussion. And one of the things that we wanted to get in, and it will get in tonight, is the sharia-compliant opportunities. And we sort of ended off with that in our last discussion. And we spoke about Omnia, its potential growth. You mentioned the Wonder product, UMates, and that is currently trading at a deep discount compared to the global comparatives.
Yes.
So, inshallah, from there, what is happening from an Islamic compliant, opportunity in the market?
Okay, that's a mouthful. Assalamu alaikum wa rahmatullahi wa barakatuh, and shukran for inviting me back. I thought after the last one you will be too scared and too somber, bearer of bad news. I'm not going to get invited back, so I'm surprised I got invited back. I think, the massive opportunity we see is that during times of heightened volatility, which we are living now, Sharia-compliant investing is actually a great shield. In Islam, we talk about, your 5 daily prayers being a shield for you as a Muslim. Similarly, Sharia-compliant investing is a shield for investors against heightened volatility. And I'll give you... Sorry, you've got...
Why is that?
It's a very important question. Because... Again, before we launched our fund, so our Islamic equity fund is now over 15 years old. When we launched a fund 15 years ago, we didn't have a track record. And guys like Ali, Sali would say, where's your track record? You don't have a track record. So what we tend to do is we do sort of back testing. Yeah. So remember, we launched our fund in 2009. So we came out of the global financial crisis in 2008. So we did a 5-year back test of what Sharia compliant, if we had managed a fund that adhered to Sharia compliant rules, what that fund would have done. And what we discovered is that coming out of the global financial crisis, Sharia funds massively outperformed conventional funds for the simple reason that they had less debt and leverage and exposure to leverage. So that's why I say, during periods of heightened volatility, the leverage is what's going to kill you, because what you find is that companies with weak balance sheets, and a weak balance sheet is a company with more than 40 to 50% debt. What then happens is you've got a fixed cost in terms of your debt servicing or your interest bill, but your revenues collapse. So that just makes it worse in terms of the outcome for investors. So, and that's why we are firm of the view that we think that Sharia funds in this period of volatility and heightened uncertainty, your best sort of strategy is to actually say, guess what, I'm going to try and stick to my Sharia-compliant investing strategy and not take on too much risk via balance sheet risk with conventional funds that can invest in a lot more levered or geared companies, but that introduces greater volatility and risk to you as an investor as well. So that's the backdrop. So when we put the portfolio together, the first criteria we say is that reduce the amount of debt and leverage that we're exposed to. Then the second thing is, given that we spoke about tariffs, we wanted to get exposure to companies that benefit from 2 things. Firstly, they are not directly exposed to the shotgun and the sort of the radar of tariffs. And if you look at that strategy, it's companies that produce in China and then sell in America. They are in the crosshairs of Trump, and that is exactly what Trump is targeting. So you don't want to have too much exposure to those. And then secondly, you actually the counterfoil to that is to benefit from companies that goes the opposite direction. that maybe either produce in what we would call hard currency countries like the US, Australia, North America, and then sell to emerging markets. Because guess what? The emerging markets are still going to be the engine room for growth globally. And Omnia ticks those boxes in that it doesn't have a lot of debt. In fact, it's got net cash. They've done a few deals where they've disposed of assets, so the balance sheet is very strong. And if you look at what they do, the bulk of their manufacturing is either in South Africa or it's in places like Australia, which are fairly neutral countries from a tariff risk point of view. And actually, they sell globally. They sell to Brazil, they sell to North America, they sell to Asia as well. So ticking all of those boxes, we then dig deeper into these companies, kick the tires, speak to management, and we discover, as you call it, the wonder product, Mumates. And if you look at the composition, and we've got the slides up, if you look at the composition of Omnia's business, it's fairly well diversified. You've got the mining, you've got the mining services, you've got the chemicals business. So it's fairly well diversified. But in essence, the big opportunity for them is this Humates product, which is a fairly new product, as we discussed briefly last time. It's a byproduct from coal mining, because you get the coal, and then below that, about sort of 2 to 3 kilometers below Earth, you find this Humates product. So globally, there's only, according to our research, only Queensland in Australia, and then some obscure place in North America. The North American product is inferior to the Australian product. And this market, because it's fairly new, it does trade at a discount in terms of the market price for Humates. But as farmers start realizing the benefits of this, of taking your Humates and combining it with your fertilizer, the appeal of it is greater for farmers. So we think that two things will happen. Omnia will be able to increase production, and actually the price that they charge and get for Humates should also increase. And to give you a sense, in the world today, you've got largely 2 centers for potash. So your fertilizer, the biggest component of fertilizer is potash. Potash is mainly found in Canada, Saskatchewan area of Canada, and in Ukraine, Belarus, those areas. So those are the major centers for potash production. So if you think about it, here you've got a product that is not in Canada, it's not in Belarus, Ukraine, it's in Australia, but it actually blends well with these other products as well. So we think that the economics and the dynamic in terms of geopolitics will actually say that, in an environment where Russia is still under sanctions, Belarus and Belarusia is also under sanctions, people are going to need product that augment their NPK, and Humates will come to the fore. But even in a scenario where, say, the world welcomes Russia back into the fold, Belarus becomes part of the global establishment again, and they start exporting 7 million tons of potash. This Humates is still at a much lower fraction of the price compared to the potash market. So it still makes sense for farmers to say, reduce our NPK and take more Humates and blend it together and improve your yields. So the big advantage of Humates, it gives you much better yields on the same square area of farming land that you farm on as well.
That's interesting.
I remember last week we talked about the South African economy, and now talking about emerging markets.
Yes.
You mentioned that some of the biggest in terms of exporting, and we're talking about tariffs now, and trying to stay out of the crosshairs of what is produced in China and then sold in the US, for example. And you mentioned it was citrus, and also the BMW X3s, for example. On that, and thinking about the emerging markets, when you look at a company, for example, like BYD, the Chinese car maker, they are growing massively. And even if I look at the South African market now, for example, with the amount of Chinese cars now being driven in South Africa, how do you see a company like that? And is a company like that seen as being Sharia compliant?
We actually did look at the company. It is Sharia compliant. The thing that holds us back is valuation. It had look, it's still at a big discount to Tesla, but Tesla is in a different league altogether because it's got very disparate sort of parts to it as well. So BYD from a growth point of view is fantastic. We think that the runway for growth is quite significant. We have started to see the Europeans following the American playbook in terms of putting up some tariffs on BYD and requiring them to partner with local OEMs. So the big risk to Europe is, if you think about it historically, the German auto manufacturers, the Japanese auto manufacturers, they are the biggest sort of casualties of the rise of EVs from China. And I mean, I looked at that BYD truck. It looks quite nice. The bakkie, it looks very, very nice. So, and I mean, those things are priced at $500,000. You can't get a Tesla for that amount, even a quarter of a Tesla for that amount. So I think the market impact is certainly there. The thing that holds us back is valuation, and the issue for us is that even if you look at the most optimistic scenario around cashless for the next 2 to 3 years, we still think that the valuation is a bit rich. We would love for it to halve and then it'd be a great buying opportunity for us. But yeah, it's really around valuation. But I think that whole theme of EVs, what China has done very successfully is that they've not only dominated the world in terms of EV manufacturing, but they effectively control that entire value chain. So, for example, from copper production, where they own their own copper mines, to rare earth minerals, these rare earth minerals, which are, some of them are quite critical for electric vehicles, for energy transition, and even for AI as well, for AI requirements. So for them to basically take a holistic bird's eye view and saying, this is where the world is going, we need to be in control of that. So today, China does 90% of the world's processing of rare earth minerals. So even though we find some rare earth minerals in South Africa, because China controls the processing part, and that tends to be quite an intensive, labor-intensive, water-intensive, environmentally sort of quite intensive process. Any country that has rare earth minerals, by default, need to send them raw to China for further processing. So, and because of that, China can then dictate terms in terms of pricing of the end product, etc. as well. So BYD is just a symptom of the rise of China, and the fact that China has taken a long-term view and said, look, we can't compete with Apple and NVIDIA and all of these in terms of current technologies, but we can certainly dominate in terms of the vacuum that has been left for EVs and the whole complex and ecosystem that goes with EVs as well.
Just to maybe move the conversation a bit, when we look at equities, for example, normally within the portfolio, we try to provide clients with consistent returns. Combine that with sukuks, specifically with in the Islamic investment portfolios. Maybe explain to us what sukuks are, and to our audience, maybe you can explain how that benefits them within the portfolio.
Yeah, I think that's an important conversation, because if you look at the last 5 years in South Africa in particular, most asset classes have been subservient to equities. So equities have really dominated. But, at periods, in the last 5 years, we've had the COVID pandemic, which is now 4 years in the rearview mirror. But that has been a period of extreme volatility. So when we have these bouts of volatility, you want to have an asset class that doesn't behave like an equity. And, when you study financial analysis and portfolio management, the first thing they teach you is about two assets that don't react the same way blends very well. Because if you're building what they call an efficient frontier portfolio, taking one asset that behaves very different to the other, but also has a positive return, gives you a much better portfolio outcome. And that's why Sukuks, we think, is, especially for Sharia-compliant investors, is the holy grail of investing. It needs to be, it's the secret sauce to give you that boost, but also to give you that stability. And invariably, whenever we interact with clients, they want two things. They want the two impossible things. They want high returns at zero risk. So, so we can give you one or two. We can give you zero risk or low risk in terms of sukuks, but then you need to compromise on the return. But we've developed a product, our high yield fund, and we called it a high yield fund by design, because the focus there is in a total yield from the fund, which has done particularly well over the last 5 years, including periods of COVID. So to answer the question, a sukuk, there's a unique Sharia-compliant product which is unlike a bond. And I don't like to use the word Islamic bonds because it's an oxymoron. It's not, you don't get an Islamic bond. But for simplistic purposes, a sukuk effectively is an instrument that is asset-backed, and where the counterparties, the capital provider, so you get the two dominant forms of sukuk in South Africa is the muraba and mudaraba. Don't worry about these terms. It effectively just denotes how the agreements are struck. But the big opportunity for us is that, for investors as well, is the certainty it provides in terms of how we distribute profits, how we share in profits, how we share in risk as well. And the fact that it is asset-backed, like the government sukuk. So, for example, we've got Department of Water and Forestry assets that are backing that sukuk. So it's a much more secure product and investment compared to a naked, and I call it a naked government bond because there's nothing backing it. It's basically a promise by a government that will pay you back your money. If the government is in trouble, like Argentina's defaulted so many times on their bonds, then you are in trouble as the investor. So from that point of view, if you look at the sukuk market in South Africa, it's still fairly small. You've got the banks that are big providers and now the government sukuk. But already this market is done particularly well. To give you a sense, over the last 12 to 18 months, sukuks in South Africa has delivered between 25 to 30% returns, which is much. So our first objective is to outperform inflation by 1 to 2%. And last week we spoke about the oil price and the fact that that's come down. We think that even with all this tariffs and talk of tariffs, the South African inflation outlook is fairly benign. We'll probably be in this 3.5 to 4.5% environment for inflation. So if you can get an outcome, and people, we at some stage we need to talk about these fly-by-night schemes and people chasing 50% per month returns. But the reality is, for any person looking at long-term wealth creation, if you can outperform inflation by 2 to 2.5%, that's a very good outcome over the long term. And where we are now, we've got the one chart showing the inflation and the projection for inflation. We're in a realm of 3.5 to 4.5% inflation. So let's call it 5% inflation. If you can get a product that gives you 7%, so 2% ahead of that inflation, that is a fantastic outcome, especially if it comes at very low risk. So in the Sharia market today, our Sharia investors are actually spoiled for choice because there's quite a few sukuks out there that can give you a 7% return at very low risk. And this is a per annum return, depending on how you structure it. And so we certainly believe it's an essential building block as part of a Sharia-compliant portfolio. And certainly, in any income portfolio, any sort of, real asset sort of objective, it's an important building block, and it's a great Sharia opportunity for investors in South Africa as well.
So sukuk basically still remains an attractive, even in a declining interest rate environment.
Definitely.
Aziz, talk to us a little about fixed income. What's happening there? How are we looking at that?
So obviously traditional fixed income is not Sharia compliant, so that's an easy one for me to say. People shouldn't go there. But, if you look at the outlook for interest rates in South Africa, it's very much linked to the outlook for inflation. And like I said, we're still in this environment. Look, the Reserve Bank has flagged the fact that tariffs might, cause inflation spikes and etc. But given that growth is slowing down, I don't think any Reserve Bank, not even in South Africa, but even globally as well, is going to start raising rates because everybody knows that with high tariffs, you're going to see the impact on growth. And because tariffs will be inflationary, but it's more from a administered pricing point of view, it's not real inflation in that it's consumers buying more. It's basically price inflation, administered price inflation. So as a result, we're likely to see, flatlining in terms of inflation. And as a result, we don't think that the Reserve Bank will raise rates in the foreseeable future, certainly for the remainder of this year. So from a traditional fixed income point of view, there isn't the prospect of rising rates. What that means for the consumers is that we think that, given the risk of tariffs and prices going up, if you can, to the extent that people can, they should try and really accelerate their bond payments and accelerate and reduce their debt and reduce exposure to debt. and then free up capital so that you can, hopefully diversify into Sharia compliant investments. Start buying these sukuks, because what is likely to happen in a year's time or in 2 years' time, rates could be lower. And what you then have is that what we saw in 2020, when the Reserve Bank cut rates aggressively, the sukuk rates also came down. So it went down as low as 3.5%. So if you can get 7% today, that's and actually almost lock it in for between 2 to 3 years, that is a fantastic outcome. So let's say in the next year they start cutting rates, the sukuk rates might come down to 5 to 5.5%. You're still locked into your 7% rate, which is a fantastic outcome for you.
Abdulaziz, when I listen to you speak, when you talk about equities in the Sharia compliance space and then also sukuks, right? Equities in the Sharia compliance space, if I could use the acronym ESG, which is very similar to kind of the Sharia compliant investments. It has similar concepts, but that governance piece and when you mentioned leverage. So when you include certain shares into your portfolios, you make sure that those companies are not over leveraged. They don't have high amounts of debt. So in times like this, where there's high volatility, things like tariffs, these various things, unforeseen circumstances, these Sharia portfolios from an equity perspective tend to perform well. Then as well, when you look at it now from the sukuk perspective, they're not naked bonds like you said. They're asset-backed instruments, and also in times of volatility, if you, like you said, if you buy them now, you lock into those rates potentially. If interest rates go down, you can then lock into those returns that are beating out inflation. What's interesting about the Sharia compliant portfolios as well, and what a lot of people don't know, is that there's an aspect of purification also within the Sharia compliant portfolios, which I always find amazing, because that purification and that they normally refer to it as purification. There's a portion of sadaqah that happens from that. So maybe you can talk to us about that.
I think that's an important conversation, because it's not just about Sharia investing, it's also about investing for good as well. So in South Africa, and especially, and I'm sure the viewers know about, US aid, for example, the big cuts that has happened there. And US aid has been an important sort of component in our country in terms of social welfare projects. So, for example, we had a call from a lady that, does a lot of good work in the Eastern Cape amongst HIV positive mothers and babies, for example. So their funding overnight has been cut from USAID. So what we do, as you've rightly said, the purification process is there, but then also by stripping out that money and then looking at, charitable causes that are effectively right up there in terms of do good for society, having an impact in the most vulnerable portions of our society, mothers, children, all of that, that's quite important. So that real world impact, I think for me, getting up in the morning, going to work, that is really what excites me. That is what drives me as well. And that's what I'm passionate about. I mean, to give you a sense, over the last 15 years, we've distributed something like 15 million, almost 16 million rand. And organizations like Gift of the Givers have received in excess of 5 million rand from our investors. So it's invested money that we basically, it's an amana that we take on to distribute on behalf of the investors. So they should feel proud and good about it, that they've been able to contribute to these organizations as well.
Oh, that's awesome. Abdulaziz, you're the head of research at Camisa. And I wanted to ask you, in terms of what's happening, with everything that's happening and volatility, I'm sure guys like yourself are quite busy during this time. People calling, what should we do? Camisa, what is their vision? If you read about Camisa, they speak about being active management. How has the strategy changed over the last couple of years in terms of what's happening and how the markets have gone?
Yeah, It's a very deep question. So I think we've done a lot of navel gazing in terms of the big learnings from two things. Firstly, what happened to the whole mining industry in that 2012 to 2014 period, and then also the COVID pandemic. And we are resolute and firm in our belief that active, in what I say active, we basically, when we build portfolios, we start with a blank piece of paper. Because that is by far the best way, we think, to do two things: to get the best returns for investors, but to also actively manage risk. And like you said, since COVID, since March 2020, the world is in a different paradigm. The world changed then, and it hasn't gone back to it. We've always had something on the go globally as well. So that necessitated you to be active in your approach, because we are the stewards and basically the wakils of people's wealth, and we're taking on that amanat. So we need to be not only on top of what's happening globally with news flow and with research, but we also need to be active in terms of how we look at portfolios. And in the past, when I started out in the markets in the late 1990s, I'm not going to give my age here, but you build a portfolio and then you can go to the beach, you can go running and cycling, and nothing happened in terms of that portfolio. Maybe once a month you look at the portfolio, and then maybe once a year you change things. Those days are gone, because with the volatility, you as a fund manager has a duty to continuously look at that portfolio and see, is it fit for purpose for my clients, both in terms of their return objective, but also in terms of managing risk. And as a result of that, one of the big talking points a few years ago was about what they talked about turnover in the portfolio. If you had a high turnover, it was seen as a bad thing. But turnover can be a good thing as well, because imagine we sat on a portfolio that has done very well on paper, then COVID happens, and overnight share prices fall by 50%. Now you as a fund manager, you haven't done anything for your client. Suddenly you've cost them 50% of the portfolio. But if that stock has reached its fair value, you've sold that, you've crystallized, you made that profit, and you redeploy that profit into another opportunity. That's how the compounding effect actually works. So we try to be true to our vision, active fund managers and active investors, because that's the duty that has been entrusted to us as custodians and as stewards of people's capital.
Abdulaziz, shukran so much for coming back onto our podcast. We really appreciate it. I think we've quickly run out of time, and we want to wish you all the success and all the best, continued success. And the saying in Cape Town is, or I think South Africa is, that may you grow from strength to strength, inshallah. Ameen. And just from our perspective, I think the work that you do is quite amazing. And specifically from me, we know that you are one of the, really the leaders within the industry, and one of the pioneers. And not necessarily pioneer. Maybe I don't want to go that far, but but really, one of the people that are making a massive difference within the industry, and we are very grateful, and I'm sure the Ummah is grateful to you. But on that note, I think we'll end it, Siraj.
Yeah, no, it's been another interesting evening, very fruitful, and we can only thank Abdulaziz again for the opportunity and for the time. Your insights have been extremely valuable, and more than likely we'll have you back for another update, some more questions. There's so much happening, there's so much things that are happening. But perhaps to end off, just Abdulaziz, looking ahead, what are your biggest concerns, as well as your biggest sources of optimism for the next 12 to 18 months for the Muslim investor?
Yeah, I think my biggest worry is that there's so much volatility and so much brinkmanship going on in the world. I mean, India, Pakistan, the US, that somebody makes a mistake. And because my biggest worry is that the guy that's in control of the nuclear codes in America is not the brightest vessel out there. So I think that is actually a big worry for us, is that people, inadvertently or knowingly makes a mistake, and it costs us dearly in terms of either global economic growth or investors' sort of wealth in terms of stock markets. So that's something that is always in the back of our mind. And actually internally, that's something that we're always debating. What if there's another repeat of COVID, or massive lockdowns, or a global financial crisis? And if you think globally, everything points to what Nassim Taleb talks about the Black Swan event. But in essence, a Black Swan event is something, to be a Black Swan, you can't anticipate it.
Yeah.
So in the back of our mind, we think that there could be something like that, but we just don't know when it's going to happen, or if it's going to happen, and what the format of it's going to be. So that's my big worry. But I think what gives me great optimism, and why I'm optimistic for Sharia investors in particular, is just the weight of history. Whenever, even going back to the Second World War, from those periods, Sharia-compliant investing has always shown to be much better in terms of not only protecting people's wealth, but also getting better returns during periods of heightened volatility. And again, something that I think I mentioned last week, which is basically that we are in an age of greater information and information dissemination. So we don't need to be smart. You just need to be able to get access to the right information and make the appropriate decisions with it. And I certainly think we've got much more access to information, and that gives us a lot of optimism to be able to make the right decisions for investors as well.
Awesome. On that note, shukran so much. And to our viewers out there, if you enjoyed this podcast, shukran so much for tuning in. Hit that subscribe button, the like button, leave a comment, and inshallah we'll see you soon. Assalamu alaikum wa rahmatullahi wa barakatuh.